Good morning, traders. It is Wednesday, June 29th. Let's take a look at our last pick. Every single video starts off with my last pick. I want you to get a feel for how well this system works. Friday was the last video that I recorded, and it came out before the open. So let's take a look at my pick. ZS was the stock that I highlighted. Here you can see stock raced up with the market. We had a massive gap and go formation last Friday. Our least favorite scenario. I'm going to get into trading gaps in just a little bit. No reason to chase anything right now. The market is so volatile. There's no reason to chase stocks, especially on the upside when we have a very strong market trend lower. So you come in, hey, Pete likes ZS today. I'm going to keep an eye on it. We'll take a look at why I like it longer term. Stock rallies up. Pete, how do I know what to do? Stock rallied up, looked great on the open, but you told me to hold off. Well, here are your clues that you should be watching for. These long green candles are significant, especially the opening price of them. You want that price to be preserved. You want the halfway point of these long candles to be preserved as well. It's relevant, not as important as that open. The stock comes up and it hits resistance. So now the stock starts to pull back. You get two stacked long red candles that erase that long green candle. This is bearish. That is not a good sign. That tells you that the stock has sellers. So you should patiently wait, and you can also see orange line below zero. This measures strength relative to the S&P 500, and you can see how the stock is very, very weak relative to the S&P 500. Three stacked long red candles, and now all of a sudden, you start to see some price compression. You can see how the bodies of the candles are getting smaller and smaller. That's one sign of support. You can also see that that's the opening price. All right, we're finding some support. There we have a bullish hammer. Try to get below that opening price. No go. Bounced up. Here we've got another test of that low right in here. No go. Little bullish hammer. Nice long green candles. So things technically are starting to improve here. You can also see on the chart that ZS, which was the pick of the day, is starting to gain momentum. It's getting its relative strength back, and you can see how it continued to be strong relative to the S&P 500 because orange line above zero. That was a beautiful little entry point. You can see from basically 165 to 170 is where the stock closed. Really nice little 5-point winner in here. No fear. But the question still looms, how do I know that this is a good entry point? Am I just going to go off of this relative strength? No, you would also want to make sure that you have a market tailwind. So let's go in and take a look at the price action from last Friday. You had to act quickly if you're going to catch the move. We don't act quickly because we don't want to chase a gap and go formation. But if you're watching ZS, here's what you should have in the back of your mind. Stacked long green candles. Pete told me, and please go back and reference this in the video, I had mentioned, I believe we're going to get a gap and go formation. That means that this pattern is going to run its course in an hour, maybe 90 minutes, and then we're going to compress. The rest of the day, we are going to compress. It's not going to do anything. That was an excellent call. And you can see how we got tiny little rally in the last 10 minutes of trading. This is a 5-minute chart. So in any event, as far as the market's concerned, we reach that buying climax and then we flatline. Well, the good news is that if you're a buyer of stocks, you know that you still have that strong market tailwind. There's no reason for you to bail on stocks right now because the market is going to continue to be strong. Every little dip gobbled up, gobbled up, gobbled up. So you don't have any fear that the market is going to fall apart. Market first, market first, market first. So now you start taking a look at ZS. You're like, okay, well, it's a tech stock. It's pretty volatile. It's pulled back. Tested that open from the day. 1, 2. So now we have 3 tests of support. downward sloping trend line, breach to the upside, nice long green candle in here. Okay, things are starting to cook in here. And I've got strength relative to the S&P 500. This day trade is setting up. Let's go into the daily chart and let's see how things have changed pretty dramatically in just one day. You can see how the stock backed off. This was a horizontal resistance level that the stock had been able to break out through, and you can see how now it's starting to retrace. Tech stocks in general got hit very, very hard, and you can see that we have a cup and handle formation, and that is horizontal resistance that we need to get through. So what I'm going to do, because I do still like the stock, is I'm going to click on that GTC. So that is going to give me an alert if the stock can get up through that price point. I'd also mentioned that you have an upward sloping trend line right here. And I do like that upward sloping trend line. And we click like that. So your bullish put spreads would be sold below this upward sloping trend line. Keep them very short term. RBLX was another chart that I liked with a similar double bottom, higher low, good relative strength. This one I sold a 30-28 bullish put spread expiring this Friday, and I was able to get 30 cents for it. So that, I believe, is a trade that I also highlighted in the last video. You can see how the stock has pulled back, but the reason that we're selling out of the money bullish put spreads is to take advantage of high option implied volatilities and, most importantly, to distance ourselves from the action because we can expect market volatility. Yesterday was a classic example. So we're going to get into yesterday's trading. We're going to take a look at the price action, and now we're going to find a new trade. So let's take a look at what happened yesterday. Let's do a little fast forward. First, we're going to go into the daily chart of the S&P 500. And you can see how we had this horizontal resistance right here, breach to the upside. This is last Friday's price action, and that was a gap and go formation. You can also see that this horizontal resistance right here was breached to the upside. The key takeaway to everything right now is this is a very strong downtrend. All of your opportunities should be on the short side. And as ugly as things have gotten, and as big as the temptation is to go out and buy stocks that you liked 6 months ago because they're beaten down, that's not what you should be doing at this stage because we're still seeing a lot of selling pressure. So we get this really nice candle here. We get this breakout above horizontal support. Now resistance. So we're above it. Everything looks great. Monday, we needed to make some hay. Now, we could have had one day of rest and stayed right tight to the high from that long green candle, and that would have been fine if yesterday we added a nice long green candle to it. However, that's not what happened. The start of the day yesterday looked fantastic. Things soured instantly. So the one thing that I want to mention about gap and goes, especially on the upside right now, and chasing. You could see in the example I just gave you how the gap and go was beautiful. Oh my God. You had to act quickly, and if you did, you were a happy camper. The risk is very, very high in here because you are trading against a longer term bearish market trend. So you do not want to be in here because on these three candles right in here, you could have seen long red candle, long red candle, long red candle through the opening gap. And now you're going to fill that price and you're going to be scrambling. You'll have your head handed to you. You're going to be worried about your positions. You're going to be trying to exit those positions. You're going to get crushed. And instead of taking a look at stocks that present opportunities, you're going to basically get to the sidelines and you're not going to do anything because that is going to damage your psyche for the day and you're going to be reeling because you've got a bunch of losses. So the risk of trading early right now is not worth it. We can get so much information on what the market's doing And in this instance, the information that you got is be patient. Okay, yeah, we got the gap and go. Now we're compressing, but the dips are still very small. So if I find the right stock on the long side, like ZS, that dips along the way, I can take advantage of it and I can get long. So here's what happens, and here's why we do not want to chase the open. Yesterday, there's the prior day's high. It looked like we were off to the races, and you can see we gapped up. Okay, that's nice. And then we had this big surge higher on volume and this big rally right in here that cleared the prior day's high. Hey, Pete told me that the market needed to add to Friday's gains in order to validate that long green candle and that breakout through resistance. So yesterday we come in, I told all the members in the chat room, hey, this looks pretty good actually. And look, we're able to preserve all of this long green candle. And look, this is nice right in here. They tried to hit it, didn't even get down to the halfway point. This is really the critical level that I'm looking at because it's the prior day's high and it comes into play right in the middle of that long green candle. Didn't even get there and bye bye bye. They ran it all the way back up. But I said, we got to wait 45 minutes. We don't know if this thing is going to follow through or not. If it does follow through, it should have happened in one of these two bars right in here. We needed to see buyers aggressively take out the high of the day. They were aggressive here. Now all of a sudden they're passive. The longer we sit up here, the greater the chances of a pullback. Then all of a sudden, long red candle. Okay, well, this closed right where the low from this candle was. That's not particularly good, especially since it closed near its low. Wham! Uh-oh. This was a tell. These two red candles stacked consecutively. They take out the halfway point of this long green candle. They're also violating the prior day's high. This was bearish. When I saw this, I told my members, and then this candle just absolutely confirmed it. Three long red candles erase this entire long green candle instantly, and we take out that opening price. So now all of a sudden we're shifting gears. We're going to get a gap reversal. So this is a 5-minute bar. You can almost assume that the market opened up here because in 5 minutes, zoom, it went right up here. So now all of a sudden, we've got a gap reversal underway. We're below the prior day's high. We know that the long-term market trend is lower. As we come in here, we're starting to see the 10P indicator lose its steam. And so now we know that there's selling pressure building. Once I saw this, I said, well, we're going to fill the gap. If we fill the gap, we're also going to try and shake out these sell stops right in here because you can see bye 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 bye. Lots of buyers stacked up all throughout here because buyers like to buy the low. They like to buy on support because then they have limited downside because they're going to put their stops just below this price point. So they have limited downside, but very nice upside. Well, when this support level starts to stack up like this, then you know that it's just a matter of time until the programs go and hunt for them. In this particular case, I said, listen, typically when they're just hunting for stocks, this is stops. This is the price action you'll see. One long red candle through the low, and then the next one reversing right back up, just to flush all of those buyers out of their positions and to attract some bearish short sellers, and then they instantly reverse it. Well, in this particular case, these stacked long red candles were telling me that this was not going to be a head fake. When we break through this low, this is some heavy selling momentum. Once we did that, you could see the long red candle, and then the rest of the day, very, very bearish price action. We never got anything going. So when you get these big drops, well, how do I know, Pete? I mean, sometimes I come in and I get these long red candles, blah, blah, blah. Looks like the market's going to go down, and then it bounces. Well, usually those bounces are going to happen on days where you've got mixed overlapping candles on the way down. So in here, you would see mixed green candles in here and you would see some bounces. You're not seeing that steady, 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 steady selling pressure. Let's go into the prior day. Let's take a look at what that did. So yes, you do get some bounces, and when can I expect those bounces? Well, when you get long red candles, then you get all sorts of mixed green candles in here. This is no bueno. This is all overlap. This tells you there's no real direction. So now you pull back, get a higher low double bottom in here, downward sloping trend line. Yeah, you get a little bit of a release up in here. But when I'm trading this, I'm not thinking go mode. Here we go, here we go. We're going to go to the moon. Oh, this is great. You're not going to get that kind of price action in here. You're already seeing every little rally met with selling. Every little rally met with selling. So in this type of environment, you're thinking, no, we're not going to get through this high because these are mixed overlapping candles. Very, very different from what we saw yesterday. So you come in here and you look at this and you go, ooh, there's a bearish hammer right at the high, followed by a long red candle. Okay, we're seeing some resistance now at the high. We did not stack candles right through it on the first attempt. Go mode. No. Okay, well, now we try again with the long green candle. Let's try and poke through it again. No go. Another drop right in here. And then we have this red candle in here, which is retracing all of that long green candle, starting to see resistance, long red candle. Then you know we're going to start heading lower. We're in a fairly tight trading range. This is the first hour high, first hour low, and then we spend the rest of the day just chopping around. Very important that you look at this price action and understand what it is telling you. We're inside the first hour range, lots of mixed candles, green and red, overlapping all over the place. Translation, we're not going anywhere. We're not going anywhere. Buyers and sellers are paired off. This tells you we're headed lower. This type of steam into a support level tells you it is going to be breached. It's going to be tested. Very good chance it's going to be breached. Look at this bounce. So when you're trying to decide how big are the bounces, the previous day, we're seeing all sorts of bounces just like I showed you. You rally up, nope, pull back. Now you get a bounce. Now you get a sell off. Now you get a bounce. Now you get a sell off. Choppy type of price action tells you that buyers and sellers are paired off. Look what kind of bounce we got yesterday. Now here is a bullish 10P cross right in here. You would expect a bounce. But when I saw this type of selling pressure, I told members in the chat room, I said, folks, we can expect a bearish divergence here. That means that when 10P starts going higher and we have what normally would be a bullish cycle, you can expect prices to continue to drift lower. So in here, we get tiny little bounce. Couldn't even clear that red candle in there. This long green candle right in here, instantly reversed. There is no strength. There is no buying. We're taking out the low. So we get a bearish divergence in here. I had also mentioned that this bearish cross right in here was going to be a good one, and it sure was. So here we get another bullish cross. All right, this time for sure, after heavy selling like that, we should get some lift during this bullish cycle, right? No. And you want these little bounces in here to last 30 minutes. Not a whole lot more than that. If they start lasting 45 minutes, 60 minutes, then you know support is forming. But when they only last 20, 25, 30 minutes and you can't get off the deck, then you know sellers are in control big time. So you get a little bit of a bounce during this bullish cycle, and that lack of bounce, very short term bounce, very shallow bounce, does not retrace much of this move right in here, then you know that sellers are still in control. Upward sloping trend line, bearish cross right there. Hello. So, very nasty price action yesterday. I want to talk a little bit about trading gap and go formations as I did before. You don't want to chase because you're going to be struggling with big losses very early in the day. Wait 45 minutes. Make sure that those opening gaps higher are holding. You got to be super, super cautious on the open. Now, if you're looking to fade a gap, and I'm not advocating that you do this, but if you do fade gaps, you need to have proof that the gap is going to reverse and that it's going to fail. And in this market right now, if you are going to fade a gap, it better be a gap higher. So you get a gap higher, you want to join the long-term market downtrend, you are already in your mind thinking there could be a good opportunity on a gap reversal when the gap is up because the long-term market trend is down. So I'm going to be watching for an opportunity. I'm going to be watching for signs of selling. Wham, wham, wham. Below the low of the day, below the open of the day. All right, this is when I want to get aggressive with my shorts. And that is exactly why I did not want to trade that gap and go higher on Friday on the upside. I will forego these losses right here. The other thing about chasing a gap and go to the upside is look, what's your upside here? So it's going to take you a few candles to figure out that you're getting that formation. So let's say 25 minutes elapse. Well, a lot of the move has already been exhausted. Look, first you got that big part of the move right in there. Then you've got, oh gosh, I guess we're adding to it. So now you've already missed that. So you got from here to here that you've already missed. Well, what's the remaining upside? Not actually that much. So you're not really missing a lot. Just be patient. Wait for those opportunities to set up like you did on ZS, and you're going to be okay. Now, the flip side to that is that if you chased this move, you got your head handed to you. But if you're looking to fade this move, you've got not only the distance from here to here that you can recover, so lots of momentum, excellent momentum just down to where the closing price was. Plus, if you take out the low of the day, you got that. So you have a lot more room when you're trading gap reversals than if you're trading a gap and go. I hate gap and go formations. If you get a gap down, you do not want to be trading a gap reversal because the market trend has been lower. That gap is probably going to continue to go down. One final note on trading gaps. The other problem that you have is that on a gap and go formation, as I'd mentioned, you've got a lot of risk because where are you going to put your stop up in here? You can put it here at the opening price, but look at how far that stop is. Yes, you can trail it up and you can put it up in here, and now you can put it up in here if you happen to catch that move. It's too risky, especially early in the day. So that's a little information on how to trade gaps up and gaps down. Now let's take a look at that daily chart and get our market bearings. Downward sloping trend line, still intact. Horizontal support right in here. Now we're back below it. You can see that all the gains from Friday, this long red candle engulfed it. You have an upward sloping trend line right here that's going to be violated to the downside. I believe the S&P futures were indicated about 10 points lower. We're going down, folks. We're going to test this low in all likelihood. So let's find a bearish pick. We don't want to chase anything. And then, by the way, I'm going to show you at the end of the video, you can come in and try my mobile app for free. So let's go through one of my favorite lists, and that list is Pop Bear. These are great for swing trades. HD, nasty downward sloping trend line, horizontal resistance. You can see that long red candle yesterday. I'm just going to click through Nike post earnings, taking out horizontal support. That looks nasty. Now, the one thing that when I do these videos, the difficulty for me is I can't really take a position in something that's been smoking to the downside because a lot of that move is probably already exhausted. I need something that's got potential to continue to move lower. I want to try and get you into the trade early and not chase something that's already made a big move. So I like this. I like this upward sloping trend line right here that's breached to the downside. I like the fact that it's back below this horizontal support. Here's another upward sloping trend line that's been breached to the downside after earnings. So they hated earnings. Sold off, a little bounce, and now you've got a bearish flag formation. I like DOCU on the downside as well. And that could be my pick of the day. I'm going to keep looking. eBay, very chunky. So moves up, compresses, moves down, compresses. Very kind of chunky, choppy moves, so not my favorite. I like GM for a couple of reasons. If the economy is going to be in a recession, then car stocks, automotive companies are going to get hit. And we have this nice little upward sloping trend line right here. So the caveat to the trade could be that if we are below that upward sloping trend line, then you can take a bearish trade. And the notion would be that the stock has the chance to go down and test that low at 31.20. Well, the stock right now is at 33.99, so call it $34. This opening right here is what I'm looking at. So if GM is below $33.11, we're going to take a short position in GM. That's going to be your pick of the day, but that condition must be met. Also, very important, I'm only looking for day trades right now. I'm not looking for swing trades. You can't swing trade this garbage. I mean, look at this. You're up 70 points one day, you're down 70 points, you're up 50, you're down 50, you're up. Then you get these long. You can't trade this. I mean, if you came in here and you thought, okay, this is it, we're in go-go mode, we're going to run higher, and then you get a day like yesterday, swing trades right now, just don't do any swing trading. If you are a swing trader, there's a good time to just take some time off for the next 2 months. We still have an FOMC meeting coming up in July. They're talking possibly 75 basis points right now. Asset managers are not going to like that, and they're going to wait at least a couple of months to see if the economy holds up. If the economy holds up, they'll wait for the September Fed, and then they're going to wait for the Fed's comments after a month and a half recess, and they're going to evaluate where they think the Fed is, what economic conditions look like, what inflation looks like, how's COVID doing in China, all those supply disruptions, everything. They're going to be evaluating to see if the economy is heading into a recession. So they are not going to be aggressively buying for the next couple of months. We also have earnings season coming up in a couple of weeks. They're going to wait to see what that guidance looks like. Are all these supply disruptions hurting profit margins? What about input costs? They're going to evaluate all that. So do not think that, oh my gosh, this is my last chance to come in and buy these stocks at this price. It's simply not true. We're going to see more market volatility. Asset managers certainly are not in that mode right now. Don't take my word for it. Just look at the charts. Look at the price action. The price action is telling you they are not ready to buy. So, favor the downside. Look for the market to come in, test this low down to the 365 level on the S&P 500. As it does so, watch this upward sloping trend line. As it's breached to the downside, it will gain momentum. GM below $33.11. That is a short as well. That's all I've got for you today. A lot of educational content. I hope it helps you become a better trader. Hope all of you have a great time celebrating the 4th of July. We'll see you after the holiday. Oh, by the way, oh my gosh, I almost forgot. I am going to have an open house on my new app, and I'm going to show you how you can take advantage of that. All you have to do is come in and register, www.oneoption.com. Come to the website, take the free trial. You'll learn how to do that. Get started is what you want to click on the website, and you'll have 2 weeks to use Option Stalker Pro or my mobile app, Option Stalker. I'm going to show you how easy it is to find day trades. It'll be real easy to find swing trades too when we're in that mode. But I'm going to go into Option Stalker. I'm going to just run a very quick search. So you come in, you see that the market is bearish yesterday. You can click on the M5 S&P chart just to get your bearings. And there you see the big reversal. Real-time data is included in the mobile app. Now I've expanded it a little bit to show you that it can be used on tablets. So that's what the mobile phone would look like. This is what it would look like on a tablet. So you start getting these long red candles. You get a sell signal in here, that yellow dot. And you can see that there's continuation. Okay, hey, I'm in bearish mode. This looks like a gap reversal, especially when we take out the prior day's low. So I'm going to go into lists and I'm going to click bear because we want to be on the bearish side. I'm just going to click Royal Flush Bearish. And when you bring that up, you're going to see the buy, or in this case, sell signals for all the stocks that have sell signals across every time frame, M15 to D1. These are weak stocks. You don't even have to bring up the chart. You can, but you don't have to. They are all super, super weak. And when you see a blue ring around a red dot, it means that for that specific time frame, it has heavy volume. So let's click through these stocks, and I'll show you how to do that very easily. I'm just going to go on a 5-minute time frame, and I'm going to do like 6 or 7 of them, but I'll show you how easy it is to find great stock trades. So early in the day, you're seeing this on NVIDIA. You can see stock is weak relative to the market, orange line below zero. You have bars, volume bars above zero, telling you that it's above average volume. So let's say that I want to continue to flip through these charts. Very easy way to do that. It'll go right through the list. Just click this forward arrow, and we're just going to take a look at the next one, Amazon. Amazon has a sell back up in there. Let's go to the next one. SMH, that is a semiconductor ETF. AMD, yow. Very nasty chart. So in here, long red candles stacked to the downside, heavy volume across all time frames. Yes, that is an excellent short. And that's all you have to do. Coin, nasty. And you can also see the relative weakness, PYPL. You can see the relative weakness. You can see the heavy volume in here. Never gets above zero. This stock is selling off hard. You want to take a look at the daily chart, click the daily uh, time frame, and there you're going to see a daily chart. Downward sloping trend line still intact, horizontal support being tested right there. You can see that drop right there. So PayPal could be good, but it does have to get through this horizontal support in here. But on a day trading basis, very weak chart. Let's go back into the 5-minute just one more time, see what else we can pick up on. Airbnb, nasty reversal. So this is how easy it is to find stocks. You can create your own custom searches. And let's go in and do that. I'm going to click lists. And then I'm going to click on the search variables. Whoops, sorry. And I can create a new watch list, or I can go in and create my own custom search list. So if I want to be bearish, I'm looking for weakness versus the S&P 500, I would click all of these, save the search, name the search, and then you'll be able to see it in your own lists, just like I have some lists right up in here. Like Big Five is just a very easy list that I have that has some of the largest tech names in it, like Apple. You can also go into your own watch list. Let's say that you're long Amazon and you see that it's selling across all time frames, might be a good time to take some gains on it or to exit. Or if you're short it, you can see that yes, everything is still a go on the short side. Meta, Google, same type of thing. So this is a very quick, easy way for you to load up your watch list, your portfolio, and see what the stocks are doing on a day-to-day basis when you're on the go. So again, www.oneoption.com. Saturday, Sunday, and Monday, if you've previously registered with the website and you have previously taken the trial, just come and log in. You're going to have access to Option Stalker, so you'll be able to check out the mobile app this weekend. Very excited about it. I think those of you who live active lifestyles and can't camp in front of a computer screen all day, I think you're really going to love it. Everybody that's tried it so far has really been excited by it. So thanks so much for watching. Have a great holiday. We'll see you next week.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.